Good afternoon. It is October the 1st, 2015, the start of a new quarter, the start of a new trading week, the start of a new trading month. So here we find ourselves. We came in this morning wanting to sell. We thought that start off wanting to sell 20s to 25s, lowered that to 10 to 15. Market was selling coming in, and my feeling was that yesterday's rally was window dressing, so that turned out to be correct. Started out wanting to buy 1900, 1905, lowered that to 90 to 95 by the end of the day. The market was just selling. We just weren't getting any lift whatsoever, and so the assessments and the levels worked out pretty good for us. There were three mean green trades that worked, and the reason they worked were, and this is big stuff, we kept making new lows. And because we were making new lows, the market had a chance for those to work. So on the indexes, not so much on the financials or treasuries, it works pretty good. Everybody's really enamored with the VRAP right now. That is a retest failure. It's also a V-top. V-tops, V-bottoms, leaning against 10-minute bars, highs and lows are the trades that are working well. Here's a retest failure trade. S works. This S right here, scratch. Retest failure, S, S, plus trade. V bottom. When we got a lot of volatility, short covering takes us up. V top gives you a trade. S. So I think what we figured out over the last couple of 3 weeks is that especially 2 weeks ago, we took several V-tops and V-bottoms, and they produced for us. And the reason for that is that it's on this chart right here. This chart, everybody is moving at the same time. We look over here, it's all red bars. Market comes back down. All blue bars to the upside, just bang. All three red bars right here. All blue bars on the right. So, and it's in all four of these panes almost all of the time. So the market turns on a dime, and I've sent a question to my subconscious, and hopefully we'll get an answer on what's making these people move. Unless it's just the Fed, and the Fed is buying 100 lots on down when they do it, and that would make some sense. So this turn on a dime, this schizophrenia, the longer term trend is intact after the market retraces. And when we go to our 10-minute trade, right here, I think it gives us the best opportunity to trade and handle this market. We've got great trade location. We've got really good risk reward. And just looking at them right here before the market open, here's a nice, right underneath that letter S is a red on red trade. We don't really get a blue on blue trade. Here's red on red trades right up here, those three bars that hit the mean green line. Right here under this letter S is a red trade. Got the letter S and the rest of it red on red trade. Both of them just really, really powerful trades. Coming off the lows down here, when we start to get higher lows, here's a blue on blue trade that produces. Finally, you're able to execute right here on a blue on blue trade. So you've got great trade location. Risk reward is exactly where you want it. If you haven't, move to the red on red, blue on blue. I think you should. It's a better trade. And you know, when the market settles down and we lose the volatility, we can go back to the other way of entering and taking trades. So that's the way we'll play it. You have to be flexible. Markets change. I mean, we have to change what works at some point. Doesn't work well. After a while, or pretty quickly, we see what's working and not working. We change our approach to trading. Okay, looking at the F1 screen, higher low, higher high, the market, we could buy weakness. I think the easier trade, because resistance is held and because the news is so bad, is to find a place to sell it. But tomorrow we have a Newsday trade, and they're looking for unemployment at 5.1% unchanged. Non-farm payrolls at plus 203,000. I'd be kind of generous. Compensation up 0.2, and average work week at 34.6. Then we move to factory orders at minus 1.3%. So you know the news, you have the trade, and it is that simple. And you can't know the news with 100% certainty, so that's where we're going to be. If the numbers come out as forecast, it's friendly for equities until you get to the factory orders number, and that's not so friendly. For treasuries, it's not friendly for the unemployment numbers. It is friendly for the factory orders number. And so who are you going to believe, equity players or the bond players? And I'll go with the bond players when it comes to fundamentals any day. So here's the E-mini. It's a pretty square distribution. There is a tail up there, but if you cut the tail out, it's a D pattern leaning P. If you include the tail, it's a B pattern. So it's really kind of mixed. So let's take B out, and you can see how square this distribution is, and volume tends to be, it's pretty close to the middle. So we got a D pattern. We're awaiting news. We're looking for a new move out of this 1903 area, and what do we have in L period? Got a new move. So if the market was to close right now, we're going to sell the 12 to 15 areas, sell 1. Then 20 to 25 for sell 2. On the buy side would be buying 1900, 1902. Then 90 to 95. So we got a buyer at 90 and we got a seller at 15 as it stands right now. But we do have news, and it will impact tomorrow's trading. And it's the easiest write-up for me each month. I mean, you know the news, you have the trade. And we'll have a pretty good feel for how the market's going to play it. But on paper, the headline should be supportive. And then we got to go and well, what in the hell does that mean for the E-mini? Is good news bad news, or is bad news good news? And that's always the rub with the E-mini. You don't have to worry about that with the bond and the note. I mean, they're going to react with the news. They are going to trade fundamentally. Then whichever way the E-mini moves becomes a factor. So when we look at the note or the bond, we don't have any trouble getting on the right side as far as fundamentals are concerned. Then the issue becomes which way is the E-mini going to trade. So we have access to about as good information as you're going to get. Higher low, higher high on Treasury says tomorrow's number is going to come in lower than forecast. We've got a pattern in today's 10-year note. It's a B in an up market. That means long liquidation or profit taking. So selling failure to basically where we were this morning, selling failure to take out 28.28 to the buck, and then 03 to 07 for sell 2. On the buy side, we're pointed lower. We got this volume down at 22, then we got volume beneath it at 18. So because we're pointed lower, maybe somebody else will take profits overnight. We'll try to buy 17s to 21s where we were this morning. But it might take a 25 to get in. I don't think the E-mini is going to sell this afternoon, but it could. If the E-mini sells, I will probably pay enough to get into Globex. The contract, they can put a lot of money into your account, and again, not all trades work. I mean, you have that, but when these guys trade the 30-year or the 10-year, they want to be long or short, because the market making, the primary dealers will sell you or buy from you all the paper you want to put up. It is not a problem. So the buy on this is 21 to 25. Buy 1. Then we're going to go down to where that volume is, 9 to 13. On the sell side, last rotate up was 04, so 3 to 7 will be sell 1, and 15 to 19 will be sell 2. And it's down to the news. You know the news, you have the trade. Easy for you to say, Charles. We've got good ways to trade the explosiveness and the volatility. We'll go over those in the morning, where you don't have to stick your neck out, and you can still make your business plan without assuming inordinate risk. Okay, gold kind of died today. Very, very tight range. I would imagine that a lot of that was due to the tomorrow's unemployment reports. Lower high, lower low. This market is still in the process of selling. But you can see we had pretty good buying at 1100. And there's pretty darn good selling at 50. So that's a $50 trading range. That's about right. So this screen says find a place to sell it. That's worked out pretty well for us. The F2 screen right here with the C tail is a B, but go inside the congestion area, there's a lot more volume above 115 than there is below it. So kind of getting mixed information. So pretty easy to say that I think the market's going to head lower. So let's put 5 to 7 buy 1. And buy 2 will be at the buck, 1100. That's where we'd like to get into the game. On the sell side, we'll make it 18 to 20 for London, and 24.26. But it's, you know, you get a little action in London sometimes. It can also be very, very quiet. Crude oil, we really don't have to worry about that too much as far as tomorrow's news is. But you can see right now that it gets pretty thin above 47 bucks, and really, really good buying below 41, but we're ways away from that. So 44 minus, 47 plus on this. Big outside day that favors trading range, so we'll see where the news takes us. And you can see on this screen pretty heavy selling, so stops below 44 and a quarter, so we'll put 44 and a quarter, 44 even, buy 1. Obviously you got to get through 60 to get there, but this market can move pretty quickly. So we'll put a question mark at 44.50, then 43.50 plus or minus for buy 2. So 43.50 to 44 allows them to get stops below 44 bucks. The sell side, last rotate up stopped at 45.24, so 25 to 45.50 sell 1. Then 45.75, 46 sell 2. And there could be, you know, if the fighting escalates in the Middle East, things are getting out of hand in the Middle East. Not that we're going to have anything to say or do about it, but again, like I said, if I were Saudi Arabia, I'd be camped out on Pakistan's doorstep with a checkbook in hand. And you don't understand what I said. How much? Listen, you still didn't understand what I said. How much? And Pakistan's a Sunni nation, Sunni based, so they have common interests. But given the population of Saudi Arabia, given their physical location, they're not going to be able, given the fact that the United States isn't going to take care of anybody in that part of the world, including Israel, Israel's got nukes. Saudi Arabia ought to nuke up. This is why no one wanted Iran to get the bomb. I mean, it doesn't make sense. These you know, if you're dealing with a communist, China or Russia, these guys believe in living large, and their philosophy is 100% materialistic. There is no afterlife after you die. And of course, nobody can say that there is with 100% of certainty. But they aren't interested in getting there any faster than they're going to get there. But in Iran, if you look at ISIS, you look at all these people are willing to die. And they want to take as many people as they can with them. And to allow those people to have nukes, you're out of your ever-loving mind. Euro, lower high, lower low. Find a place to sell it. But having said that, down to the news. If the number comes in greater than 200,000, our economy looks stronger than theirs. Sell euros, buy dollars. If it comes in less than 190, their economy looks stronger than ours at that moment in time. Buy the euro. Sell equities in the United States. So we'll probably have an inverse relationship. Okay, 1225 is probably pretty good resistance. So sell one. For Globex, these numbers won't be any good for the opening for the news tomorrow. 75 buy one. And 1150 buy two. And that's it for October the 1st, 2015. I will see you bright and early in the morning. You all have a good evening. The fall weather continues into the weekend for us. I'm out of here.